€61 and 56 pence sterling.
Well, after this month's interest rate rise, analysts predict the RBA will raise official rates even further. Yesterday, the public got an insight into the RBA's thinking when it released the minutes of its October 6 board meeting.
For more on this and other issues, we're joined now by the Executive Director of Bourse Communications, Rod North. Rod, good morning.
Good morning.
So what key messages did you take then from the release of the Reserve Bank board minutes?
Well, I think it's very interesting to have a really close look at these minutes, because I think it also showed the thinking behind the decision, and it wasn't actually a lay down misere that rates were going to go up, and I think that was the thing that was the big take on it from my point of view. So it shows you that a lot of effort goes into analysing the data before that decision's made, and I think there's also references to the fact that the concern about inflation has become a significant issue as well. That's the only thing I find a little bit amusing, considering that the September inflation figures are not out until next week.
So do the minutes actually reveal that specific board members argued with each other about whether this was necessary or not? Or what kind of detail does it go into?
Well, you get a bit of an inference about that, Joe, but they don't specifically mention names or anything like that. But certainly it does indicate that certain board members were in favour of increasing rates and certain board members weren't. And it seemed to be pretty line ball, I think, that case. And as we discussed it, you know, around the time, I think there was a belief that there was still a chance that rates might not have gone up at that meeting, but in fact they did, of course.
Let's stay with the discussion of inflation, because yes, you describe yourself as bemused over that, and it is, I'm sure, quite surprising to many as people as well, that coming out of the back of what was expected to be a global recession, we're now talking about inflation. Now, we can surely only be talking about a potential threat or concern by inflation in relation to government spending. Surely that's the only thing driving it.
Well, that's correct, and also you can only really know for sure, you know, once you get the data, and we don't get the data until next week, which is the September CPI.
Well, they must be seeing some earlier indications.
Well, that's what I'm wondering, because there was a bit of an expectation also that ahead of the last interest rate increase, of course, the unemployment figures came out afterwards as well, and they dropped. So, you know, you're sort of wondering a bit if the Reserve Bank might have a bit more knowledge about, you know, what's happening, and data sort of coming through a bit earlier, perhaps.
So do you think this will increase pressure on the government over its stimulus spending?
Well, I think the government's got to have a good look at the stimulus, because, you know, there may need to be some wind back there, because, you know, that's obviously something that can create inflationary pressure at the moment. But, you know, by the same token, I mean, there's been some interesting figures that have come out from Vader Advantage just recently, credit agency, that's showed that 16% of people surveyed are struggling to repay their debts. 1 in 5 people are going to apply for credit in the next 6 months, and 23% of people owe more now than they did a year ago. Now, those sorts of things are indicating that if rates are going to go up, that's going to create some real problems for some people out there as well.
Especially at the ballot box.
That's exactly right, Joe.
Now, look, talk to us about the strength of the Australian dollar at the moment. This is a bewildering situation as well.
Well, I think there's some expectation at some stage that rates in the US will have to move from their zero position, and that will in effect create a change in the Australian dollar. But that's not going to happen anytime soon, because in the situation of the US, I mean, we could potentially be looking at inflation as an issue. Their issue there is deflation. So until that's resolved, their rates are not going to go up. So the dollar's not going to be under a huge pressure from our point of view, the Australian dollar.
Terribly difficult for primary producers. We've had really good rains in some parts of the country. They can anticipate some good crops coming through at a time when the Australian dollar's through the roof.
Absolutely, and of course for exports it's just not good at all. So there's some real issues with that. But I think within the next 6 months or so, we're likely to see the dollar sort of settle down to sort of a more normal position from where it is today.
So go overseas while you can.
Take that advantage and go to the US and other places and get very good value for your dollar.
That's right.
Now with Virginia back from holidays, I know you were very keen on picking up a particular point in relation to a prediction that you'd made.
Yes, we're getting awfully close, Virginia, to that magic 5,000. I'm looking forward to celebrating the day we get there, because I was thinking it'd be before the end of the end of the calendar year, I should say.
Know,
we're getting awfully close.
And so. You know I'm a Hanrahan. You know I'm going to sit here and say bah humbug, and there's going to be a correction and all the rest of it.
It's certainly not looking like that, because I think what's happened is we're seeing so many companies reporting, particularly in the US too, which is showing positive signs for the market there. But here we're in the AGM season, and a lot of our Australian companies are going to be in a much better earnings position next year, and earnings is the thing that drives the share price. So I think we're going to see a much stronger market, barring some sort of minor corrections, but we're going to get to 5,000.
And just very quickly, did you put your money where your mouth is and you'll reap the benefits of
Absolutely,
that?
Joe.
Good on you. Good on you. Good on you.
Oh, the share market, a scary place. Just quickly, the market today, what's your
Market's probably going to be a bit flat because the US was off because of poor housing data, so I'd expect probably the market off about 20 points today.
Always good to see you. Thanks, Rod.
Good to see you.
Now, coming up.